So this should tell you that the vice versa of this should be happening. The reverse of this should be happening on pairs like EURUSD, GBPUSD, and so on and so forth. And then pairs like USDJPY, they'll be moving the same direction as the dollar, USDJPY, USDCHF, and so on and so forth. So check on pairs like, okay, yes, clearly that's what you have on the dollar. So if you check pairs like EURUSD, if you check pairs like EURUSD, are you guys seeing my screen? Let me know. Let me see if you guys are active, so that on the chat section. So ukiangalia pairs kama EURUSD, the first thing you from yesterday's session, you all know that we are at an area of liquidity, which is weak overlap. Someone asked these questions, I'll be helping them out. So we are on an area of liquidity on higher time frame, which is monthly. So if you check on the daily time frame, already we can see price had done a shift, but as much as price did a shift, we can't really see any formation. So when we use some other type of concepts, we have several, we have like agglomeration 1 all the way to 7. So if I use what you call the sub areas of liquidity, if I take you see, this is the structure, but I mark for the weeks. If I use sub areas of liquidity, I can use 1 hour and even 4 hours to get to understand what is happening. Let me use 4 hours first of all and see. So before, okay, perfect. So if you look at the 4 hour structure, is what we have. So market has started printing some, it has started forming some liquidation. I'm talking about this particular point. So price has started forming some liquidation. That's first liquidation. So we need to see maybe later on, since that is 1 hour, 4 hours, let me see 30 minutes. So later on, we need to see 30-minute structures that will give us bullish setup. So if I use that, I need to come all the way here. Then I need to see what do we have. So from the 30 minutes perspective for intraday opportunities for us to buy all the way to this area before we continue selling, just as the reverse of the dollar, because now dollar is selling, then it buys. So this one you also expect to buy and then it sells. So in terms of liquidation and liquidity consumption, on the 30 minutes, I can see a clear shift at this particular point. I can see a clear shift. You can see a clear shift at that particular point. Just a moment. Can see a clear shift at this particular point. And then price took this and it has taken this. That is an indication that we might be buying for some time before we continue selling. All right. Now, if you look at the structures that we have below the shift, we had the whole of this structure. As much as price has consumed it, it has consumed it around 50%. Sorry for that. So it has got this when the market formed this liquidation. First of all, it created this structure, then went up, consumed the structure. Then later on, price pushed up, formed this structure. That's why the market came to do what? To consume this structure. Are we together, guys? Are we following? Now, I know there are people who don't understand what I'm talking about. Don't worry. As we go on with our masterclass, the hybrid session that we have in the evening, we're going to understand the concept of liquidation and liquidity consumption. So in your area, this is the area that price has consumed. And then inside the 30 minutes, we also have another continuational shift. which is at this particular point. But below here, we don't have any information that gives us a clear indication of where we're heading to. So what I'm talking about this area, hold on. So this is the area I can consider, because at this point, price came and took the structure, but as it was doing that, it formed a type of liquidity called type 3. So the type 3 of liquidity is this one here. You see this candlestick, the first, let me show you, the first, second, third candlestick, and then here we had a bearish candlestick. So anytime you see something like this, either the second or the third candlestick comes in, the wick engulfs or reacts below the candlestick of the same color or of the same participant, that we call it a type 3 of liquidity. And it's a case for both bullish and bearish scenario. Now, when you go to the line graph, we could use these. We can use our entry based on flips. We can use our entry based on flips. And let me show you. So we can consider this flip. We can consider this flip. And we can consider the type 3 of liquidity. So if you're considering the flip, that means we'll be waiting for price to come here. Hold on. So first of all, I'll consider this type 3 and put my defense line here and here. Then I can go to 5 minutes. Go to 5 minutes and see what we have on 5 minutes. On 5 minutes, what we have, price, let me show you. Price took these, there are two areas that you can consider. First of all, let me see the number of pips from the entry. That is 2 pips, 3 pips. So what we do, you can use this zone. You can use this zone above here. Why am I using this zone? So if this flip fails, I'll consider this liquidity engineering. Reason being, this is the last high that was created, right? This high, what happened? First of all, the market took out the low, right? And then later on the market, okay, this was the last high, high, and then this was the low. So what happened? The market came to the low, and then later on the market came and took the high. So when that happens, then our liquidity, normal liquidity engineering is considered at this particular area. So that tells us we can have an idea of buying from this particular point. We can have an idea of buying at this particular point when the market comes all the way down here. Can have an idea of buying from this point. But even put your stop loss to be 20 pips, 15 pips, depends. Then when you buy from there, you're going to target the next or the nearest high that has been created. So we could even maybe, since you're intending to continue having more sales, you can have our first target at this particular point, which will give us a stop target of around 63 pips, and so on. And even if we use this and maybe we extend this to, for intradays, guys, we just need a few pips. Good risk to reward ratio, they're good to go. So depending on how you trade or the account of your size, you can have something like this. Maybe you can even have a stop loss of 10 pips, and then you target. You can have your first target at this point, second target, then maybe the last target. The last target can be, I need to check on the lower time frame. I want to see this area. What do we have? Yeah, we have a type 1 here. Yes, you can have your last target here because you can have a reaction at that particular point. That's a nice RR of almost 1 to, will give you almost 1 to 10. So that is what I'm just giving an idea for intraday, because before we continue selling, price has to come back and get. If you look at the whole of this zone, it is acting as a weak overlap on the daily time frame, which acts as an area of liquidity. So we go to the extreme point where we expect liquidity to be consumed. Are we together up to that point? I hope that is clear before I move to any other pair. Is there anyone who has a question or a different idea on that, or maybe a different view? Okay, so that's what I have on Euro USD. So depending on the account size that you're trading, it's up to you to calculate your risk and know what you want to risk. So for those guys who trade pro farms, let's say if that trade, the stop loss is, you can have a stop loss of around, maybe for pro farms, you don't have the same stop loss because most of the pro farms, their spreads are not that tight. So you can have a stop loss of up to 15 pips. So if you have a stop loss of up to 15 pips, that will be an RR of 1 to 5. So if you risk 1% of your trade and of your capital, and this trade goes all the way, you'll attain 5%. If you risk 2%, you'll attain 10%. It depends with you. That is up to you. So I always tell people, always do proper calculation. Let's say you're trading an account of $1,000. Let's say you're trading an account of $1,000. If you're trading an account of $1,000, what I expect from you, if you have a stop loss of 10 pips and maybe you are risking, let's say you decide to risk 10% of your capital. Hold on. Let's say you decide to risk 10% of your capital. That is like $100. And you have a stop loss of 10 pips. So you're going to use a lot size of 1. So which means if the trade goes against you, you lose $100, which is equivalent to you lose $100, which is equivalent to 10% of your capital. But if the trade goes to our favor, to our direction, you're going to attain, if you're attaining an RR of 1 to 10, you're going to achieve 100% profit because you'll make $1,000. Simply $100 times 10 in terms of risk to reward. If you're trading a prop firm, let's say you have an account of $50,000, then maybe you have the same stop loss, or maybe you have a stop loss of 15 pips from our entry, and then you are risking, let's say you're risking even 0.8%. That will give you a lot size of 2.6. If you lose the money, you lose exactly $400, which is equivalent to 0.8%. But if you attain the 10 reward, that will be $4,000, and it will be equivalent to 8% of that. So it's simple as that, guys. Just get to understand and be familiar with proper risk management, understand risk reward ratio, and you won't have a problem when it comes to executing your trades. That's the difference between professional traders and gamblers. You don't need to care about what the market will. Just do the analysis, follow your system, apply proper risk management, take a risk that you're comfortable with, and let the market do whatever it wants. All right. Now that is on Euro USD. So we will have that maybe for the buying. Let me if you can see anywhere we can sell. Okay. In terms of selling, we don't need to assume this one, because again, at this particular point, we have a type of liquidity. That's why you really need to understand. You have a type of liquidity. So that's why if this candlestick comes here, the current 4 hours candlestick, if it comes here and it reacts, still, okay, let me see. If it comes there and reacts, yes, there's a possibility of it coming here, reacts, come back, and then it goes up. So something like that. I think that is what I have on GBPUSD. I think that's what I have on GBPUSD. Maybe we can look at GJ. Look at GJ. Yesterday we were talking about something, but later on I sat down and looked at something different. I'm going to show you that right now. Now, if you look at GJ, guys, I'll start with the weekly time frame. I want to show you something. So initially, where price has reacted from and where the market is, I have two most important zones that I'm considering that are so important to me. Just a moment. I think I need to take this money. I had some gold scalps. I had some gold scalps. Okay, so if you look at GJ, that is weekly chart. This point or this particular price level, so I'm saying, this particular zone, I need to change the color. Just a moment. Yes, this particular point, we have a weak overlap. When I'm talking about weak overlap, you see, before when the sellers were coming in, this was the closing price, and then this was the lowest price. Before the market continued selling, you realize that probably at this particular point, buyers came in, went upside, right? Or other sellers came in from this point. No, buyers came in, went up. Then when the buyers came in, went up. Of course, that was on lower time frame, like daily, 4 hours and all that. Then because the momentum of bears was so strong, price pushed down massively. And this was the opening price. So when you look at the wicks, it's like they have engulfed each other. So anywhere you see weak overlaps on higher time frame, it's always mostly on weekly, monthly, daily. It's a consideration. When you don't have any other thing to check on, it's a consideration. It's a yes. Someone is saying GBPUSD is GBPUSD in euro. Whatever pair I was sharing was, I think it was EURUSD, right? I'm sorry for that. I think I just mentioned it. I was talking about EURUSD. So whatever is happening, if you look at hold on. Just a moment, guys. Just a minute. Okay. All right. So I was talking about this, and I said this is a weak overlap, and it's acting as an area of liquidity. That's why when the market came here, when GJ was buying, the moment price came here, it formed a structure, went all the way down, and then again came later, dropped. All right. Now, before the market continued dropping to the downside, there are things that you need to be aware of. The daily time frame liquidity area has to be consumed before the weekly structure is confirmed. So still on the same weekly time frame, below here, we have a type of liquidity. And if again you check here, we had a shift point that caused price to go all the way up. All right. Then the market never closed above this FM furthermost deviation. So we are remaining with this. I think this is type 2 of liquidity, which is backed up with this overlap, which is a structure on the daily time frame. I'm yet to show you that. So what I'm anticipating to happen, as much as we want to sell, what I'm anticipating to happen is that if you check on the daily time frame, clearly, you see we have on the area that we had an overlap, it's a structure. You see this zone. This zone. We had these swing points, we had this area, and we had this area. Then, if you had these double areas, then this is acting. Okay, hold on. We could consider this as our shift point, and the whole of this as a structure, the daily time frame. Now, since you're considering that, price, of course, reacted on a flip, and this was a round retest. We had this market drop that came, reacted, and the flip went down. Now, when you look at the recent daily structure on the current trend, we can clearly see that we have a bullish structure, right? We have a bullish kind of structure, all of these, right? I need to know if you guys are following on the chat section. So I need to see your comments so that I know we're together. So on the daily time frame, we have that structure. If you look at the consumption of liquidity, initially, I have an ultimate point that I'm going to be buying from massively, which is, I think, around 184. I'll talk about it as the week goes on. So if you look at this structure of the daily structure, we have this range. Have this range. Market reacted here, came, formed a type of liquidity, went up, came, consumed this zone, then went up, formed this structure again. Market came, consumed it, but not really fully. So the most recent area that we have that we can put a consideration that will push us to go further and consume all the liquidity. I had to, if you are on Friday's meeting, when I was telling you guys that there was an idea that we gave out, if you are so keen, if you could be having these buys here. If you are, there's a setup that we got during the start of the week, and then when the week was ending, those guys wanted to take trades on Friday. There's an idea that we shared here, if you remember very well. It was an intraday. If you could have taken that trade up to now and you were holding, you could be having more than, I think, let me see, must be more than 200 pips if I'm not wrong. If you could have taken that trade idea on Friday during the London session when you were talking about it, you could be having right now more than actually around 160 pips on GJ. Now, so now that we have this daily structure here, this daily structure, talking about this structure, we need to see as price really consumed liquidity. That's the most important thing. So we have this. If you go to 4 hours or intraday levels, what happened? The market formed a structure, came and reacted on this flip. Came and reacted on this flip, if I'm not wrong. You see? Then went up. So that tells us we really don't have much reasons to come here again. So then we have this structure which was consumed fully. Then the market is now rallying to the upside. So with this in mind, if you look at again on 4 hours, still on 4 hours, so whenever you see such kind of these is a false breakout. These might not hold. When the market will come down, price will trade below this zone. Let me show you. Anytime you see such kind, this is a false breakout. So when the market comes down, it will take all these. So if you are on yesterday's session, there's something that Ngare talked about, whereby we're going to be selling from the same entry we had the previous week. So for today's intraday's opportunities, now that we have these, hold on. This is the most recent structure. That's the most recent structure. We have like 1 hour before this candlestick closes. 1 hour 48 minutes before the 4 hours candlestick closes. So if I check on also 1 hour and see what is happening, I can clearly see that we had these. Yes, we had that zone. Validation and validation point. So, and if I look at it keenly, I can't really see anything serious here. So if I have to consider an area of entry for buys, I'll use this type 1. Focus so much here. Okay, I can do this. So we have that validation and invalidation point. Then if I go to 15 minutes, what do we have? If I need to buy from here, I will use liquidity engineering. So when I'm talking about liquidity engineering, this is what I'll consider. For one, price took this low and it took this high. So if the market comes again, this will be my OTR around 192 levels. This will be my OTR. That is a scenario for, sorry, that's a scenario for buys. So I think I need to remove these lines. So this will be my OTR. And my stop loss will be, sorry, I can either use that normal liquidity engineering or rather I can use this reactive engineering. So I want to see the stop loss, but I can see if you can refine. 23 pips. So if you have 22 pips is not bad. So you can have your entry there. You can even have a stop loss of around 22. You add 3 extra pips for the spreads, or you can narrow down to 3 minutes and get to see if you have much reasons. If you narrow down further, then if we narrow down further, our entry will be at this particular point then. Yes. Yes, you can have something like this. But I really don't, the only place I'm seeing right now as heading is just bulls. We might not come here today. I'm not sure on that. But this could be a very nice area to get some buys from. If the market will be coming there. So that is on GJ. Then, still, if I go back to 4 hours, I want you guys to see something. From the upside, we have this structure, which has also this. So now that I have these, so on just looking at the consumption of liquidity. Okay. Yes, so we'll have some buys from that particular point. So we could have buy. So yes, sorry, I mean sells from that particular point. For intradays, you can look for 100 pips. You can look for just intradays. You can a reward of 1 to 3, 1 to 4, 1 to 5 is good. So if you whatever little that you get, you're good to go. So, but for me, I prefer swinging. So that is it. That's what we have on GJ. So you might be having sales from around 194.591. Then my long-term buys for swings will be at this particular point when price will be coming here. You remember we're in the last week of the month. I'll be interested to have some long-term buys from this zone. Of course, once price comes here, I'll be so keen to buy from that particular point. That's for swings, but I'll update once price comes there. That's what I have on what do you call it? On GJ. That's what I have on GJ. If the market if price doesn't come to this before it goes down, just know that price will be coming here to push us to the upside. Let me show you. If price decides to drop before it goes down, I mean, if price if reacts before it reaches this particular point of 194, then I'll be interested to buy from this point, and there's a likelihood of us breaking this particular level. That's on GJ. Which other pair do you guys want us to look at? Gold, we already talked about that yesterday. I'm still holding my buys. I had a scalp in the morning. Let me show you the chart. I had an entry. So this is what I have. If you're in our session yesterday, we are intending to sell from here. And our first target should be at this point. Hold on. Stop loss of 20 pips won't hurt. Sam, are you in this meeting? So, choose. So, for gold, there's a fundamental update that came in the morning about the Indian jewelries. But I'll update in the Discord. You need to really be updated on what is happening. That's why when you're a professional trader, don't just rely on the technical. So, based on what we discussed yesterday, we are aiming for price to come above here, then maybe have a massive drop. We'll even be heading all the way to around the 2900 levels, rather 2950. Let me see. It's around the 2950. Before we aim 3100, right? Sometimes it needs us to use logic and common sense. Gold is not an asset that can be traded blindly. You really need to be aggressive and cautious, you know. So think, wow, like having this. I really slept late, but I'm glad I got this trade anyway. So on gold for today, that's what I'm looking into. Expect a reaction at 30.29. Remember, this is gold. Expect a reaction at 30.29. Why? Why a reaction at 30.29? Because if you check on 4 hours, we have a type of liquidity we call type 1. Now, when I'm talking about type 1, let me just emphasize on this. So I think I share this setup on Discord. So you need to be keen and alert. Once price gets there, consider to take some sales and even look for 300, 200, 300 pips high. And this one, it might deliver the 300 pips. Right now, we are up by 120, I mean 124 pips, which is not bad. So why I'm considering a reaction at this particular point, we have this type of liquidity, type 1. So price might reach here, react before it pushes up. So this candlestick here, price was trying to create a liquidation, which it will come for before it goes up. Probably if I check on the lower time frame, 30 minutes, I'll see something about that, right? Oh, sorry. I'm saying I'm anticipating gold to drop from this particular point. I'll take a risk once price comes here. Then yes. So is there anyone who has a question on gold before we check on any other pair? No question. So there's one important thing that I want to mention, guys. Just know what you're doing in the market. Don't be driven by emotions and imaginations. Oh, maybe you are holding a trade, you're scared the market is coming. Just calculate, analyze the charts, get your entry, follow the plan, apply proper risk management, risk what you're comfortable with, so that when the market is doing whatever it's doing, it doesn't affect you. I hate it when I see people close trades wrongly. And as we go on with the masterclass for the evening sessions, I'm going to teach you how to manage trades based on different time frame alignment, of course, being guided by the market structure. That's a thing that people don't know. There's a way you manage swing trades. There's a way you manage intraday trades. There's a way you take partials. There's a way you need to know that it's the right time for me to put my trade at break even and so on and so forth. Because if you cannot apply those things well, you will end up not being profitable. You might be maybe ending up, the month comes to the end, you are ending at break even, or the month comes to the end, you are on big losses, and so on. So if you don't know also how to manage your trades properly, there's a high chance of you not being profitable. So those are the things that as we go on with the masterclass, we're going to learn, because there's a topic I'll be talking about risk management deeply. There's a topic I'll be talking about backtesting. There's a topic I'll be teaching you how to refine your plan so that it can suit your personality, right? For those guys who are in the masterclass, you're gonna be learning that. Now, that's on gold. Which other pair do you guys want us to look at? Which other pair that you guys want us to look at? Maybe we can check on USDJPY. See. All right, let's. Oh, there's this trade that we had anyway. Let me just. Okay, I can start with your suggestions. Euro JPY, USDCHF. Oh my goodness. Sorry, I was saying this. when it comes to Forex, you don't need to chase the market. Just relax, analyze the market, apply proper risk management. It's not a must for you to trade daily. You can miss nice setups, or you can see clear setup from Monday, Tuesday, Wednesday, and then maybe you get a very nice setup that is aligning to our strategy on Thursday. That one setup gives you rewards or profit that could be even more than what you could have achieved the whole week. You understand? So that's why I always tell people, don't chase the market. Don't chase the market, right? And don't trade with emotions. So on Euro JPY, when I look at the monthly structure, the first thing, sorry, oh my goodness, just a moment. Okay, on Euro JPY, the same scenario. We have a weak overlap here, and we have this weak overlap. That's on the weekly chart as a zone of consideration. Then, back on the weekly chart, you can clearly see that price did a shift here. But as much as the price was doing a shift, anytime we don't have inside or out, okay, inside formation after a shift, I really don't consider those structures, because the secret is anytime you see a shift and an inside formation, consider the inside formation. It's always very, very strong. So on the weekly chart, we had that shift point, which is here. The reason also this shift point is valid, this was the last point we had, or the swing point we had, or the high low that was taken out. Then what happened? The market came and formed a formation which is going to be seen on the daily time frame. On the weekly time frame, it's an overlap. On the weekly time frame, it's a weak overlap. And then on the daily time frame, it's a formation, which we can also coordinate it with 4 hours. If you check on 4 hours, you can clearly see that this particular point, I show you where we had, it's a formation. You understand? All of this is a formation. It's a formation. Inside this formation, what do we have? Did price really consume 50% of this? Let me see. Yes, price at least consumed 50%, which means, okay, price consumed 50%. Which is an indication that then later on market came, tapped on it, dropped. Right now we are coming here. So we have had 2 touches on that area of liquidity. So there's a high chance of the market coming back inside to consume hidden liquidities that are on the daily time frame. So we have these formations or structures. We have this one here. And we have the other one above here. And then above at the most extreme point, you have a type 1 of liquidity. So you can have a consideration of this structure for more sales. And you can also consider this extreme point because of the type 1 liquidity. Type 1 liquidity. So for intradays today, if you look at the daily structure, it is giving me the same vibes as GJ. What do we have? Shift point, price formed structure. The most recent structure that cost price hasn't taken out this high. This is of course a flip. Pretty sure that was a flip. Market came, tapped, went. So we will consider this structure for more buys, but I want to look at if we have had a consumption. I want to see if we have had a consumption on 1 hour. Okay, nice. So when I look at that particular area, I can see price came tapped in, and when the market was coming to tap in that zone, in fact, it consumed this structure. Though we have this liquidity engineering at the bottom with a structure. So there's a high chance of also market coming here before it buys. But based on this recent shift that we have on 1 hour, we'll need to look at which structure broke, or which swing points broke this region, right? When you look at that, you can clearly see that the zone that broke that region was this point here, or this liquidity. So that simply means if you coordinate this with okay, hold on. If we coordinate this with 15 minutes, if we coordinate it with 15 minutes, we can either rely on the following. We can either rely on these, flip, or we can rely on this liquidity engineering. So two possible entries to buy from. So let me measure the pips and see the best place to put our entry and the best place to put them. So that's like 8 pips. Wow. That means you can consider, can have your entry, hold on, and have your entry at this particular point for buys. For intradays, maybe you have a stop loss of 15 pips. Then, once you have your entry at that particular point, your take profit will be, could be on this type 1. That's if you'll have enough momentum to push us up. That is a clean, almost 1 to 13 R. Right? Are we together, guys? I don't know why I'm enjoying to do analysis. Anyway, so that is it. So you can have that. Then we're gonna be pushing all the way to the upside. You look at that. Yes, we can have an entry that will push us all the way to the upside. Just trying to give you ideas based on okay, so that is on DJ. And have your entry there. Your stop loss 15 pips or 20 pips. Even if you have a stop loss of 20 pips, still you're on the safe hands, 20 pips. You target all the way above. You'll have your first take profit here. Let me show you. You'll have your first take profit around this point. That is when the market comes here and gives us an entry. And then the second one here, the main take profit at 163.615. So that is on for the buying scenario for the bullish opportunities. Yes, for the bullish opportunities. Then to make it more interesting, our entry is near the last week closing price, and yes, the last week closing price. So it makes it more even interesting. So that could be an area that we can have a consideration. That is on Euro JPY. Euro JPY. So I think that is it. I think I have, okay, there's another pair. There's another pair. Yes, DCHF. Are we guys following? Are we following? Are we getting it? Are we learning? We together. I've not traded USDCHF for some time. Let me see. Remember, USDCHF will move the same direction as the dollar index. Will be moving the same direction as the dollar index. So just a moment. Okay, so just a minute. Okay, so on minute. One problem, I'm not able to multitask. But anyway, so USDCHF, what do we have? The monthly time frame. Hold on. All right. Okay. So, okay. All right. So when you look at USDCHF, I'm receiving some calls here that I cannot avoid. Sorry for that. So when you look at USDCHF, monthly, that's what we have. So let's check on the weekly. So when I look at the weekly time frame, one I can see price did a shift. Okay, from the downside, you're very bullish. From the downside, you're very bullish. But if you look at the recent structure that we have, which is this one, the weekly time frame, you can use the weekly time. This is a continuation of shift. So if I can come over here to 4 hours, time frame alignment and coordination, very important, guys. So when I come to H4, because on the weekly time frame, we had this massive bears taking over. So, and here we have a type 5. We have a type 5. So what we need to see something happening on 4 hours and 30 minutes at this particular point so that we know if you're going to be buying all the way to this point before we sell. So now how do we see that? So in the first place, when I go to 4 hours time frame, maybe I need to first of all check daily. And in daily, we have a type 1 liquidity in between, which is also a structure. So let me first of all go with the weekly cycle, and then I'll confirm with the daily. So, okay, nice. So on 4 hours, we can clearly see that the market has formed some structures at the bottom here. Can clearly see that the market has formed this structure, which is a sharp structure. But this structure doesn't have anything to back it up, because anytime the market forms a shift point or anything, shift transition or anything, once it leaves an inside formation, it's an area that you really need to consider. Because when I look at this structure very well on 4 hours, there are a couple of things that I can see. We had this major shift point, and it's a reversal to facilitate the pullback. And inside, to put it in, if I need to continue buying, before we sell, my first consideration will have been this overlap, which has been consumed. So if that has been consumed, then my next target that I can have a consideration could be this overlap. Next target could be that overlap. If I go to 30 minutes, that overlap is giving us an inside formation, which is seen on 30 minutes. Giving us an inside formation, which is the last area that has not been consumed. And our shift point on 30 minutes is at this particular area. I'll show you. So which tells me if the market, before the market massively buys, I'll be expecting to see price coming all the way down. Guys, as much as we apply correlation, don't just apply correlation in a stupid manner. Anyhowly, you need to understand, as much as you are following dollar or anything to know where we are heading to, it's important you understand that independent pair that you're trading structure-wise, what is it telling you? So that you know if it's time for you to enter the trade and hold for some time. Don't just say that since dollar is buying, I'm gonna buy USD. No, if you need to also follow the structure. The dollar is just there to back you up and give you an idea of what you anticipate and the best areas to take your entry. So we'll have that area as a consideration for buys. Because if I go back to 30 minutes, you can see this range shift. So this shift could, and there's no price, there's nobody that has closed above this point. So that means there's a high chance of the market, first of all, coming all the way to the downside. I don't know if you have any catalyst that will push us. Maybe price comes here. Before it does what? It goes up, and when it will be going up, it's going for the higher time frame point of interest. Let me use the weekly. So we'll be aiming this particular point. Understand? Yes, that is on USDCHF. Are we together, guys? Are we together? Are we, anyone who has a different opinion on the same? I'm open to that. This could be a nice swing opportunity. Let me see those pips. Then how many pips are those? Wow, 200 pips for USDCHF. That is amazing. That's amazing. Yes, I think I'm ending it there. I think you've gotten ideas on what you're looking into. Maybe, let me see something else. Yes, I think that's what I have. Going to upload this on YouTube. If anyone want to rewatch it later, they can do that at their own time. So okay, so that's what I have on USDCHF. I need to see price coming here because we have this imbalance which has to be filled. And here we have impure liquidity. We have impure liquidity. Let me try to use Fibonacci and see if it's going to give me the levels that I'm looking for. Nice. It's giving me the 0.7 level is an OT. It's a good zone. So yeah. But I will go for the lower side. How many pips are these? I want to see if the pips are good. 9 pips, 10 pips. All that. Oh, then that means I can as well decide to have my entry exactly here. So that if the market might miss, that is going to give us 16 pips. Then once we have our entry there, this is just a facilitation for the pullback for the dollar based on how the market unfolds. And then you can have something like this. That is a nice RR of 1 to 10, which is not bad. Even go further inside. Let's see. Yes, you can have a fast target at that particular point, an RR of 1 to 11. So I think that is enough for now. And you guys have gotten an idea. So we meet in the evening session at 8 p.m. to 9. Those guys in that group. You guys have a great day. In case of anything, I'm going to share updates and upcoming setups on Discord. Remember, we don't trade just because we want to trade. Once the market presents us an opportunity, that's when we trade, or that's when we execute those trades. So you guys have a lovely day. In case of anything, go to the members area on Discord. Engage there. I'll be able to respond to any question or any help that you might need from me. Is there anyone who has anything to say before we end the meeting? You can raise up your hand, or rather you can type on the chat section. All right. Welcome. I'll be reaching out to you, Constance, so don't worry. You guys have a lovely day. See you at the top. The bottom is congested. See you at the top.